August is proving to be a pivotal month for anyone relying on Social Security, SSI, SSDI, or VA benefits. With key changes to the payment calendar, updates to administrative rules, and significant legislation coming into play, it's essential that every beneficiary stays on top of what's happening. Whether you're new to the system or have been receiving benefits for years, August's twists could affect how and when your money arrives, and what actions you need to take to avoid problems later. Before we get into all the important updates, don't forget to like this video and subscribe to Social Security Post. We break down every change, every law, and every deadline in clear language so you never miss out. If you've experienced odd payment dates, overpayment notices, or anything confusing from SSA lately, drop your story in the comments. We read them all and reply with helpful insights. The August payment schedule contains a few quirks that beneficiaries should understand to avoid confusion. If you receive SSI, your payment is scheduled for Friday, August 1st. For those who began receiving benefits before May 1997, or if you get both SSI and standard Social Security, you'll also be paid on August 1st, because the usual third of the month falls on a Sunday. For everyone else, the payment schedule follows the birth date-based method. If your birthday is between the 1st and 10th, expect your deposit on Wednesday, August 13th. Those with birthdays from the 11th to 20th will receive theirs on August 20th, while those born between the 21st and 31st can expect their money on August 27th. These payment dates are fixed and not expected to change unless there's a banking holiday. However, it's always wise to check with your financial institution to make sure the deposit clears without delay. Marking these dates on your calendar or setting up alerts can help you better manage your month. If you're on a tight budget, even a day of delay can make a difference in paying bills or buying groceries. Staying aware of the actual deposit dates ensures peace of mind and financial stability throughout August. Some beneficiaries, especially those on SSI, may feel like they're receiving two payments in August, but it's important to understand that this is not a bonus or extra money. The second payment is your September SSI check, which is being issued early on Friday, August 29th, because September 1st falls on Labor Day. Since SSA does not issue payments on weekends or holidays, they push the deposit to the last business day of the previous month. It may feel like a windfall now, but that means there won't be an SSI check on September 1st. This early payment can create budgeting challenges if you're not aware it's for the following month. Many seniors and disabled individuals live on tight margins, and spending that August 29th deposit too quickly may leave you short in September. That's why it's crucial to label it correctly in your personal budget. Treat it as September income and plan your spending accordingly. A little foresight can prevent unnecessary stress when bills come due the following month. As of July 2025, the SSA has reinstated its aggressive collection efforts for overpayments, and the rules have gotten tougher. The agency can now withhold up to 50% of your monthly benefits, even if the overpayment was caused by their own administrative errors. Many beneficiaries have received letters demanding tens of thousands of dollars in repayments, and in some heartbreaking cases, the debt stemmed from mistakes that occurred years ago and went unnoticed until now. These clawbacks are causing widespread fear among seniors, especially those living month to month. Many are asking, how can we be expected to repay debts we didn't even know existed or weren't our fault? The sheer financial burden can be overwhelming. That's why it's vital to act fast if you receive an overpayment notice. Doing nothing could result in automatic deductions from your monthly check, which could make it difficult to cover essentials like rent, food, or medications. If you receive a clawback letter, don't panic, but also don't ignore it. You have legal rights and a few options to push back. First, you can appeal the notice, especially if you believe the SSA's calculation is wrong. Second, you can request a waiver, particularly if repaying would cause severe financial hardship. Third, you may be able to negotiate a payment plan, spreading the amount over many months to lessen the burden. The bipartisan Stop the Clawback Act, currently under consideration in the Senate, would cap repayments at just 5% of monthly benefits and forgive debts older than 5 years. However, until it's passed, SSA's current rules remain in effect. That makes it crucial to file your appeals or waiver requests immediately. Time matters. A delayed response could result in automatic deductions you didn't agree to. Document everything, and if needed, seek help from a legal aid office. The Social Security Administration is facing one of the worst staffing shortages in its history, with employee numbers at a 50-year low. This has led to frustrating delays for millions of people trying to get help. Phone lines are overwhelmed, and wait times are now averaging over 3 hours. Many callers have also reported issues with SSA's new AI-based phone system, which often marks a call as resolved, even if no human assistance was ever provided. This technological shortcut has only added to the confusion and stress. Seniors and people with disabilities deserve better than getting stuck in endless phone loops or receiving robotic responses to complex issues. SSA is encouraging everyone to use the MySSA online portal for basic services like checking payment history or updating addresses. But for appeals, overpayment waivers, or disability claims, you'll still need human assistance, which is harder than ever to access right now. Big changes are coming to how Social Security and SSI benefits are delivered. Starting October 1, 2025, the SSA will completely phase out paper checks. From that point forward, all benefits, including SSDI and VA support, must be received via direct deposit or the Direct Express debit card. This is part of a modernization push expected to save over $200 million annually and reduce the risk of mail fraud or theft. If you're still getting checks in the mail, it's time to act. You can switch to direct deposit through the SSA website or by calling your local Social Security office. Be cautious though. SSA will never call you asking for your banking information. Scammers are taking advantage of this transition to trick vulnerable people. If someone calls claiming to be from SSA and asks for financial info, hang up immediately and report it to the authorities. Understanding what you're eligible to receive is just as important as knowing when it arrives. Right now, the average monthly Social Security retirement check is around $2,020. SSI recipients typically receive about $718 a month. If you're wondering how to get the maximum amount, it depends on your age and earnings history. Retiring at age 62 limits your benefits to roughly $2,831 per month, while waiting until full retirement age, 67, could bring it up to $4,180. For those who delay benefits until age 70, the maximum benefit climbs to approximately $5,180. These figures give you a sense of what's possible if you're still planning your retirement strategy. Keep in mind, these are gross numbers. Medicare premiums, taxes, and other deductions could reduce your take-home amount. Understanding your benefit level also helps you spot errors in SSA statements or payments, which is more important now than ever. The 2026 Cost of Living Adjustment, or COLA, is currently projected at 2.7%. This translates to about $55 extra per month for the average retiree. While any increase is welcome, many seniors are worried that this small bump will be wiped out by rising Medicare Part B premiums. It's a valid concern, especially since healthcare costs have been steadily climbing over the last few years. In many cases, retirees might find that they gain an extra $55 from COLA, only to lose most of it, or even more, due to Medicare premium hikes. That's why it's important to follow Medicare updates just as closely as SSA news. Being aware of premium increases ahead of time allows you to prepare your monthly budget and avoid surprises when the next year begins. One of the most positive developments this year is the full implementation of the Social Security Fairness Act. This law eliminates the windfall elimination provision and the government pension offset, GPO, two policies that have long reduced benefits for public sector retirees like teachers, police officers, and firefighters. For decades, these workers contributed to both Social Security and separate pension systems, only to find their benefits unfairly cut when they retired. Now with those penalties gone, over 3.1 million public servants are finally receiving the full Social Security benefits they earned. Even more encouraging, more than $17 billion has already been paid out in retroactive benefits. This is a major victory for public workers who are penalized for simply serving their communities. It shows that when people speak up and lawmakers act, real change is possible. If you were affected by WP or GPO in the past, it's worth checking your SSA account or speaking with a representative to confirm if you're eligible for retroactive compensation. The 2025 Trustees Report has issued a stark warning. If Congress doesn't act, the combined Social Security trust funds will be depleted by January 2033. That's less than a decade away. Once the trust funds run out, only incoming payroll taxes will be available to pay benefits, which would cover just 77% of what's currently promised. That means retirees could see automatic cuts of up to 23% in their monthly checks unless lawmakers find a fix. While this doesn't mean Social Security is going broke, it does mean the system won't be able to pay full benefits without legislative intervention. This affects everyone, not just current retirees, but also younger Americans planning for the future. Many policy proposals are on the table, from increasing the payroll tax cap to raising the retirement age or adjusting the benefit formula. Whatever the solution, it's crucial that Congress acts soon to restore long-term solvency and prevent painful benefit reductions. As part of the broader One Big Beautiful Bill, eligible seniors can now benefit from a special tax deduction called the senior bonus. This provision allows individuals to deduct up to $6,000 from their taxable income, and it's available through the year 2029. While it's not a total tax exemption, it does offer meaningful relief for middle-income retirees who are being squeezed by inflation, healthcare costs, and limited fixed incomes. This deduction could help lower your overall tax bill or even increase your refund depending on how much income you earn and whether you itemize or take the standard deduction. If you're living on a modest Social Security check and a small pension or savings, every bit of relief matters. Keep in mind that this bonus is not automatic. You'll need to claim it when filing taxes. It's also set to expire after 2029 unless Congress renews it, so take advantage of it while it's available and talk to a tax professional if you're unsure how to file. If you're planning to start receiving benefits later in the year, there's a rule that could help you collect more money sooner than expected. SSA uses what's called a monthly earnings test rather than an annual one in your first year of receiving benefits. That means if you earn under $1,950 in any month, you could still qualify for Social Security for that specific month, even if your total yearly income exceeds the limit. This rule is often overlooked, and many new retirees miss out on payments they were actually entitled to receive. Understanding how it works can help you structure your retirement timeline more effectively. If you're still working part-time or planning a career transition before fully retiring, knowing how the monthly test applies could result in extra benefits. This is one of those hidden rules where proper planning can lead to real dollars in your pocket. As always, it's a good idea to verify your eligibility with the SSA or a benefits advisor. With so many changes happening at once, it's easy to feel overwhelmed. But there are practical steps you can take to stay on top of your benefits. Start by reviewing your earnings history and verifying that all your reported income is correct. Mistakes in your work record can lead to lower benefits, so catching them early is key. Also, ensure your banking details and contact information are up to date in the MySSA portal to avoid payment delays or communication gaps. It's also smart to prepare for unexpected letters or delays by keeping a personal file with SSA correspondence, appeal documents, and direct deposit confirmations. If something looks off, like a missing payment, an unfamiliar adjustment, or a sudden deduction, don't hesitate to call your local office or reach out to a legal aid service. Being proactive now can help you avoid stress and financial hardship later. The SSA may be under strain, but staying organized gives you a major advantage. To help you wrap up all these changes, here's your essential August checklist. First, mark your payment date on the calendar, especially if you're receiving SSI and will get a second check on August 29th. Label that second payment as your September check to avoid budgeting mishaps. Also, confirm your bank details are accurate and up to date. This is critical ahead of the October 1st paper check phase-out. If you haven't switched to direct deposit or direct express, now's the time. Next, if you receive any SSA letters, especially overpayment notices, respond quickly. Don't assume it's an error or a scam. Look at the details, file appeals if needed, and get help from a trusted source if you're unsure. Finally, try to use the SSA online tools whenever possible, but be cautious. They're not perfect. If you've experienced glitches, delays, or confusing messages, share your story in the comments. Your experience might help someone else avoid the same issue. Thanks for sticking with us through this important update. August may be full of surprises, but it doesn't have to catch you off guard. From early deposits and overpayment threats to new tax deductions and digital-only payments, there's a lot happening in Social Security right now. But when you stay informed, If this video helped you, please hit the like button so others can find it too. Subscribe to Social Security Post so you never miss another crucial update. And if you have questions about anything we covered, SSI timing, clawback letters, MySSA problems, drop them in the comments. We're here to support you every step of the way. Until next time, take care and stay empowered. Stay in control. Knowledge is power, especially when it comes to protecting your benefits.